Hello, everyone, and welcome back to the Make Life Less Taxing podcast, the show where we uncover what really creates freedom in life and business, and we'll explore stories of those who've learned how to build wealth with purpose.
Welcome back to the Make Life Less Taxing podcast. Today, I'm joined by Brock Fortner, founder of Stone Century Financial and the mind behind Currents, a tool that's helping high-income earners flip the script on traditional planning and putting control back in their hands. Brock, welcome to the show.
Thank you, Daniel. I'm excited to be here.
Awesome. Brock, can you tell us a little bit more about who you are and the work that you do?
Yeah, absolutely. First and foremost, just a child of God and just trying to get after it each and every day. I work with families all across America. So we're a virtual financial planning practice, and we mainly work with high-paying W-2 professionals earning over $450,000 and business owners. And both of these clients are usually between the ages of 30 and 50. We love working with these families, and most of our time is usually spent with them trying to figure out, cash flow structure, tax strategies, how to build wealth generationally, but then also how to build it in a way that you have time freedom and financial freedom.
Awesome. Great. Now, what originally pulled you into this work? Was there a moment, time, something happened that kind of made you come into the financial services?
I don't know if there was an actual moment in time where I was just like, hey, this is all that I'm ever going to be doing. But, growing up, played baseball and I thought I was going to college to play baseball. I ended up getting hurt. I was in school taking accounting classes because my whole family was accountants. And I just thought, that's what I do. That's what I would do because everybody else does it. But then I was really good at accounting, but I didn't love the fact that if you messed up on your homework and you figured it out at the end, it was probably because you messed up somewhere around problem number 1 or 2. And so that just got tiring. And I ended up asking my father what he did. And I never really understood what my father did. We never really talked about it. But I ended up, he said, hey, why don't you start coming to hang out with me? Why don't you go to my workshops, see what I'm doing? And it actually turned out that he was in the financial services business and financial planning. And I really just, from that point on, I was in one of his workshops and I was like, all right, this is what I'm going to do. So I started that at right as almost 3 months after I turned 18 and haven't looked back since.
You just mentioned something and made me reflect accounting when I took it in college. I remember that working on something and it was off like a penny. And I remember just going like, here's a penny, just like put it to it. I don't want to go through the whole thing and try to figure out where you're missing that. So
Yes.
yeah, that's a little bit frustrating on that. So
Oh,
if
yeah.
you boil down, what's really the core mission that really drives you today? Like, is there a mission or a purpose behind what you're doing?
Core mission, I think, would be to help people understand that financial freedom is achievable by anybody. Today, if you looked at the stats of Americans and their finances, most Americans are just in shambles. 40% only work with financial advisors. And I'm trying to remember some of the other stats, but it's like 60% can't come up with $1,000 emergency expense. Credit card is through the roof. You have all of these different statistics that are showing Americans are really in shambles financially. And I am very confident that it doesn't have to be that way, that when you put in the right systems and structures within your finances, you can climb out of those holes. You can create financial freedom for your family and change the lives for generations in your family.
I love that. Listen, the name of the podcast is Make Life Less Taxing. And
Yes.
the play on the words is it's not about taxes.
Yeah.
Life is taxing in all different areas. I mean, obviously, it's about finance. I always tell people, listen, you know what? The financial business is not really about finances. I mean, that is kind of the main topic, but so often it's about all the other stuff because nobody really just wants to have a big pile of money, right? Like, what are you going to do with pieces of paper, right? That probably don't even have the value of whatever it is. It's just a social agreement. We believe that
That's
it's
right.
worth $10.
That's right.
That can change overnight. It has in other countries and it can happen, it can happen here. So, from that perspective, and I think you brought up too, kind of the movement that we're behind is what we call keep what is yours and break free from the traditional ways of either the financial system, the educational system, or anything that, that you're doing, and really keep what is yours. And I'm going to go back to something that you mentioned at the beginning. You're a child of God. And I think that's really what it comes down to. God has given us, purpose, mission, vision in what we should be doing. And I think most people don't go back and really find out what that is, right? I
Right.
always say there are two important days in your life: the day you're born and the day you discover why.
Yeah.
And I think a lot of people, unfortunately, never discover why. They
I would
they
agree.
never go and dig for it. They just kind of get so busy
That's right.
working. And I love this quote from uh, I always keep on forgetting his name, the Oracle of Omaha, uh, Warren Buffett. I think he
Hmm.
said this: people are working so hard, they don't have time to make
Yeah.
money.
Yeah.
Right?
Agreed. Yeah.
So
Totally.
they're really focusing on all of the wrong things. So we want to go and do that. It sounds like you're kind of on that same path now. You talk a lot about cash flow. Can you
Hmm.
expand a little bit more about that? Because often financial services is all about kind of accumulation and kind of
Yep.
accumulate that big pile of
Yep.
money so that you
Oh
can
yeah.
retire.
Oh
But
yeah.
I think you and I know that that's kind of the wrong focus.
That's definitely the wrong focus. Like if you were to just go across the board and talk to different financial advisors, they're always just going to talk about, okay, well, what are you invested in? What type of products do you
Mm,
have? When do you expect you want to retire? And what kind of income do you want at that moment? Reality is none of us really know when we want to retire or what kind of income we want at that point in time. We, most people are living in what I would call a financial junk drawer,
mm,
where they've bought all these different things from different people, different reasons, under different circumstances, in different times of their lives. And it's just a big financial junk drawer. But at the end of the day, if you really boiled it down to what makes all of this work, it's your cash flow, right? And
mm,
so, what I like to talk about a lot is the fact that all wealth is created through free cash flow. And free cash flow or net cash flow is the difference between what you bring in and what you spend, right? And so in my world, I know there's only three movements of money. So there's inflows, money that comes in, and then there's outflows, money that leaves to never come back, and then there's capital flows. That's the money that we move into assets over
mm,
time, capital flows. But when you ask or when you talk to most people have no idea the first two numbers, what's coming in and what's going out.
no,
Even if they're on a budget, they'll almost always tell you that they spend over almost every month. And so if you don't know what's coming in and you don't know what's going out, and when I mean what's coming in, I mean what's actually hitting your bank account. Because you might have $110,000 salary, but only 84 grand is showing up in
yeah.
your bank account, right? And so you can't live your life off 110. You're living your life off of 84. And then what you spend, you've got to know that too, because those two numbers determine what's left over.
Mm.
And you've got to be really efficient because we all have a finite amount of money in our world. It's about how efficient we use that money that's left over to prepare ourselves for retirement, whether that's financial freedom or the typical sense of retirement for a lot of people.
Yeah, I mean, you bring a great point. I don't believe it's never about the money that's going out. It's about, I mean, the important part is what's coming in and guarding what's going out, right? So
Right.
it's never a problem that there is too much going out. The problem is, right,
Yeah.
with
Yeah.
people just not understanding where they stand with everything that's going on. And
Yeah.
the example is somebody gets a raise for $500, and they go get a $600 a monthly payment for a car. And
That's
it's like,
right.
okay, you got it a little bit backwards, right?
Yeah. Definitely have it backwards. And what you see is the so everybody wants to talk about the fact that there's a savings problem, there's a retirement savings problem, there's a debt problem. Like there's all these problems, but they're not actual the problems. They are the side effect
Yeah,
of
they're
the
a
true
symptom.
problem. And the true problem, or yeah, the symptom, the true problem is the fact of how people or most people have their cash flow structured.
Yeah.
Because when you look at most people, they live on what I would call the financial treadmill. They get their paycheck, they deposit it in their checking account. And if we sat here and asked what the actual job of a checking account is, like what the one job is, it'd be to pay for expenses,
Mm,
right? So it's really just an expense account. Your paycheck is deposited in that expense account. You spend the money and then you try to figure out how much to save, if there's anything to save, and then you manually have to move that money to a savings account.
mm,
It happens, move money from savings back into checking, and you're just going back and forth over and over again. And this is what creates lifestyle creep. Like you just said, they get a $5,000 raise, so they go get a $600 payment a month, right? Well, As long as your income is deposited into the same account your expenses come out of, they'll almost always run in parallel with each other.
Mm.
And it comes from how most of us were raised because if you think about it, when you think back to when you were a kid and the times you went to the bowling alleys or field trips or ballparks or whatever it was, your parents or guardian or someone likely handed you money and told you this was your spending money. And then you'd go spend it because you knew your job was to spend the money. And somehow you always figured out how to spend almost all of it. I even remember when I was a kid, I'd have 3 quarters left at the ballpark. And so I would go take it to the concession stand and get uh, 15 pieces of double bubble just because I had the money, but I needed to spend it. Well, as we've gotten older, nothing has changed. All those years in our development years, we really put this neurological pathway of when we are handed money, we're supposed to spend it. So now, as we're older, we just went from parents giving us money to payroll giving us money, right? And
Mm.
so we're just fighting an uphill battle. And the way to get around that is to fix your cash flow structure to where now your paycheck is deposited in a totally separate account. And we call this your reservoir account. And rather than figuring out how much you move to savings, you only figure out how much you move to your spending account. So now, as you get raises, as you get bonuses, as you get more money along the way, you're no longer asking yourself, hey, how do I save more of this? You're asking yourself, hey, do I need to spend any more of this?
Mm.
And that's really what helps curb a lot of these problems that we're seeing in America. And we're seeing the proof in the pudding as we implement this for thousands and thousands of clients across our current platform is that our average user saves 29% of their income.
Mm.
The average American is saving 4%. And it has to deal with how you structure your cash flow.
So really, at the end of the day, it's all about structure, right? And how it's
Absolutely.
all set up. And I love that analogy what you mentioned. And again, these are the kind of traditional systems that we're trying to get people to break free from because they don't even think about it. And
Yeah.
the kind of the analogy of what happens when we were kids. Yeah, we were not thinking about where does the money come from. It just comes from this never-ending pocket. Yeah, we hear our
Yeah.
parents saying that we don't have money, but
Right.
you know,
Yeah.
it just
Yeah.
kind of comes, and we were never taught how
Mhm.
that money appears or
That's right.
what is happening with it. And I think again, it's not the fault of our parents because they were taught from their parents and it was the same thing. And I think this is
Yeah.
the unfortunate thing that we
Yeah.
keep on kind of repeating the same thing. We're all kind of
Agreed.
plugged into this matrix that keeps on
Agreed.
teaching us the same thing. And put it that way, I call myself a recovering CFP. I got my CFP designation in 2009, and then I read the book Rich Dad Poor Dad.
Yeah.
And there it's telling me that my house is not the biggest asset. I
Uh-huh.
remember reading the book and arguing with Robert, going like, this doesn't make, that's not what they're teaching me. And then unfortunately, I find out again, I think there's a lot of great individuals in the financial industry, but I started to
Yeah.
find out that most of the companies in the financial industry were not
Yeah.
teaching me how to help clients. They were teaching me how to sell their product.
That's right. The,
And
these corporations and financial institutions are not dumb.
yeah,
They know what's going on. And if you think about it, I call them the big three: the government, financial
yeah,
institutions, and big corporations. They have 4 rules that they teach consumers and the advisors of consumers to play by. They're not the rules that they play by, but they're the ones that
yeah,
they teach people to play by. They want our money on a consistent, systematic basis. They want to hold on to it for as long as possible. And then when they want to give it back to us, they want to give it back to us in the smallest increments as possible. All the financial advice out there,
yeah.
put it in the max out your retirement plans, pay off your house early, do all these things, all fall in line with those rules. And who do they benefit the most? The corporations,
Yeah.
financial institutions, and the government. So I am so right there with you.
Yeah. Oh, it's because what goes hand in hand, we were kind of educated on all of this stuff. I mean, when you're looking
Yeah.
at the educational system, right, it's all built on the old Prussian model. What they needed were workers and soldiers.
Yep.
Basically, people, they don't want them to think.
Uh-huh.
And when people go through the educational system, essentially what it does is produces taxpayers,
Right.
right? Like, don't think about it, don't question it. And I think this is where the opportunities are as we work with advisors. We tell them that actually, when we're looking at what all the different assets there are,
Mm-hmm.
taxes is actually an asset because you have a choice how much you pay. And most people don't
Right.
understand that,
Yeah,
right? But even when you're W-2 employees, there are certain things you can do, right,
there
to
are.
actually reduce the amount of tax that you're paying by starting a business or doing different things that are not very complicated. But unfortunately, most people think, oh, I've got an accountant, I've got a CPA I'm taking care of. No, they don't do a lot of proactive planning, right?
Yeah, they're definitely most CPAs are historians.
Historians, yeah.
They're not actual proactive, forward-looking.
Yeah. I call them archaeologists because all they do is they just discover what already happened, what was.
That's right, that's right, and, it's unfair to them because most of the time, clients will go to them and they'll say, "Oh, well, how do I save in taxes?"
Mm,
And most of them will think, "Oh, well, you're talking about this year because we're looking at this year's tax return." And so they'll give you the advice of, "Oh, well, just, max out your SEP IRA."
yeah,
Well, yeah, that's great. Yeah, you might have saved taxes this year, but you didn't really do anything. You just pushed them off to later. You're just
yeah,
deferring the receipt of that income to a later date.
yeah. And I think even beyond that, most of them don't do any planning for this year. They talk to the accountant in the new year, asking about last
Right.
year, and it's like
Right.
once
That's right.
December rolls around, January 1st comes on,
Yeah.
not much you can do.
Yeah.
So
January 1st is when your tax planning should begin for the next
for
year.
the next year, yeah, you should be doing the tax planning for this year right now.
That's
Yeah.
right.
But again, and I do agree with you, this is not to slam CPAs and accountants.
No,
Often they
no,
just
no.
worry about compliance because that's really
Right.
often what their job is.
Yeah.
And there are some firms that are doing some proactive tax planning, but a lot of them just basically go and do the work that basically people come to them and saying like, hey, I've made this money, reduce it or give me whatever you can do. Well, their hands are kind of tied because it's all
Agreed.
previous years. And, when April, rolls around, they can't really do much. No.
Agreed.
So when you talked about it, and I like that analogy of the financial junk drawer, uh, can you expand on that a little bit more? Because yeah, I think that's the biggest challenge. And again, when I was an advisor, I've seen that a lot. That
Right.
nobody's there to really take a look at if some of the strategies and things they're doing are not even competing. And I think this is kind of what you mean by that. By
Yeah.
people buying these things, put them away, and thinking they're all set, not
Mhm.
realizing that actually there might be some dangers that are lurking there.
That's right. And as you were talking, I remembered where you said you were recovering a CFP, and I think it's hilarious how many people are like, "Oh, well, are you a CFP?" Coming from the outside of the industry looking in, and it's like sometimes I just want to look at them and say like, I know more people who have given up their CFP than who have actually kept it. Because it's just it's more of a marketing play for them. But when you think about someone's financial life. And I'll repeat what I just said earlier, which was most people are living in a financial junk drawer because they've bought different products from different people for different reasons at different times under different circumstances. And everything is kind of a siloed approach to their finances, and nothing's really coordinated or integrated together so that it's all on the same sheet of music and you're moving forward and you know what's going on, so that when your accountant gives you a piece of information and your advisor gives you a piece of information and your attorney gives you a piece of information, you know exactly who to choose from and what advice is the best for you because it's coordinated. But if it's not, if you are living in that financial junk drawer, you have no idea what you're going to do,
Mm.
right? And so one of the biggest areas that I see this, and it's probably the easiest one to think about, is you will have someone who says they are drowning in debt. They're having such a hard time paying it off. They don't know what to do about it. It's getting ahead of them. But yet you look at their retirement planning and they're maxing out their 401k and putting money in a Roth IRA. And it's like, wait a second. If you took this same 23, 24, whatever it is this year, $1,000, even after taxes, and paid off your debt, you would get a higher rate of return than you would be putting it in your 401k.
You have a guaranteed rate of return.
Yeah. Yeah. That's right.
Wherever they're doing over there, it's not
That's right.
guaranteed. Right.
That's right. That's right. Because you are actually lowering the money
Mm,
leaving your world. And when you lower the money leaving your world, that means you get to put more back into your world. And so if you don't have this coordinated approach, you may you may just be treading water.
mm,
And most of us don't want to tread water for forever because that's pretty painful. And at some point you need to get out. And so you really got to get out of that financial junk drawer. You got to organize it and have a coordinated plan moving forward so you can make the best decisions that are right for you.
yeah. You bring a great point. I remember having a client came to me and saying, "Hey, Daniel, I've got this $40,000. I want to invest it." And like the first question was, "Okay, perfect. We can go and do that. But let me ask you this: do you have any credit card debt?" "Oh, yeah, yeah, yeah. I've got like $60,000." And I'm like, "No, no, we're not going to put it there." And I had to argue with the client to go and pay off the credit card because I said, I've got no way how to guarantee you like 20% rate of return. Like
Right.
it doesn't exist.
Right.
Here
That's
you
right.
will have it. But again, it's that whole mentality. And you brought something up. I don't know how you feel about retirement. I believe retirement is a failed experiment. We're talking about Bible. It doesn't say anywhere that we were to retire. Thou
Not,
shalt
not,
retire at the
not
age of
single
65.
place.
Right.
That's right. Not
So
single
I don't
place.
believe I will ever retire. I will always going to be doing something. So again, it's
Right.
something that the financial industry has kind of came up with. Well, it was government that came up with it, and they
Yeah.
did it for a reason because they had too many people that were around.
Yeah.
So they forced them to retire.
That's
Right.
right.
Again, a lot of people don't understand that, but now it's been
Yeah.
built into this thing. Oh, you hit 65 or 60 and you can go and retire. Most people, like especially people that I'm around, it would be
Yeah.
like, you know what? No, I could stand retired maybe for a week. After that, no,
Yeah.
it's like reruns. I've got to go and do something.
Yeah.
So most
Yeah.
people go there, but the financial industry is still pushing this movement, right?
Mm-hmm.
Without really asking the question, is this really what you want? Like, do you understand what's going to happen, right? Like, are you planning for it? What are you going to be doing? Because it's like you're now starting another career if you're thinking about retired, because yeah, it all sounds good. I don't have to go to work. But at some point, it's going to become very boring, and you kind of have to go and plan for that, right? So again,
Agreed.
these are kind of the systems that all need to be, broken down, and what
Yep.
needs to, what needs to happen, right?
That's right. That's so right. I could not agree with you more because it's like if you actually did a deep dive into retirement, you would find that it was built in, I think, in the Industrial Revolution, and they made it because you had all these older workers
Right.
that were slowing down the efficiency of the factories. So they needed to kick them out so that they could bring the younger people in to be more efficient again. But then this is the key part here. They had these things called pensions, right? Defined benefit plans. So when they retired, they actually knew what was actually going to be coming in. The risk was on the corporations, not them. They were set. Not to also mention life expectancy was like 70 years old. Okay. Life expectancy today is 84, 87 years old in America. And we no longer have defined benefit plans. We have defined contribution plans. We have now the risk has been all transferred to the employee to make sure that they save the right amount of money to put it in the right places so that they are prepared for retirement.
Yeah.
Now, I also don't believe in retirement. I think it's kind of dumb, but that's not to say you should not plan for a day when you are taking distributions, right? Because the reality is people are going to get bored. People are going to want to have to do other things besides the job that they are in. But if they have a purpose, a passion, something that they want to pour into, how awesome would it be if you could stop working from your current job and go work for your church, but then tell the church, hey, you don't even have to worry about making my payroll because I did the right thing. I built up my assets and my assets are producing the income for me. But then you also have to know that there are some people nowadays that do not get to retire by choice. We have things like dementia where they require you to retire. And if you are not prepared for that, if you do not take the intentional action, the diligent action to take care of your money while you were working, there's no way that it'll take care of you when you're retired. Right. And so you want to really be prepared for that and know how you're going to be able to spend your money. But the traditional sense of, all right, you're retired, kick it up, go drink some pina coladas, not about it. It just doesn't work. And if you think it does, I would just say pull up the statistics and look at what happens when people retire early and kick it up on the beach. Tell me how quickly they get sick and quickly they die.
Yeah. No, you bring a great point. I mean, yeah, when the first kind of government assisted plans came out, I think they came out where they were paying at the age of 70 and most people died at like the age of 65. Like it was just kind of like they knew they're not going to have to pay out. And it was kind of more of a political stunt. And then somehow it stuck. Now it's kind of adding some of these other pressures and what other people's are doing. But again, I think what it comes down to, and like for me in my business and what I want to do is like, hey, you know what? I want to go and do the work that I love with the people that I love doing it whenever I want and wherever I want.
That's right.
That kind of creates the freedom that you want to have. So I'm not saying that, hey, if you want to go and retire and take it more easy, no, 100%. But there are a lot of people that have to go to work because of their finances and what has maybe happened in the stock market because they put it in there and they lost some of it or all of it, right?
Yeah.
And there are people that basically are choosing to go to work. I want to be the one that I choose. I get to choose what I'm doing, and I think that also gives you freedom. That you get to choose what you're doing right now. You don't have to work as hard because you know that you're going to be working maybe longer and you're going to be doing other things, right? So
Right.
like the idea is the prize is not the destination. The prize is the journey, the life that you're living right
Right.
now. And I think the financial industry is talking all about this destination, kind of like think about retirement, start putting all of this money in here into all of these plans, because we're going back to, and 100% agree with you that, you know what, they want to get your money and they want to keep it for as long as they want. And when they want to go and pay it out, it takes forever.
That's
Right.
right.
And,
That's
and,
right.
and often they're haggling, and it's like, hold on, this is my, this is quote my money, right? I should be able
Yeah.
to go get it, but
Yeah.
unfortunately, the industry is designed in a way that they're kind of wanted to keep it for as long as they as they can.
Oh yeah. Yeah.
So,
I I agree.
why do you think so many even financially successful people still feel stuck or unsure, even when they think that they're doing all the right things?
Other than social media having a massive impact on everybody in the comparison game
Mm,
and them feeling that way, I would say that they don't have a actually, now that I think about it, I think a lot of them. I think about this mortgage broker that I was talking to a couple years ago. And he came to me, and he wasn't a client or anything, but he was just a friend. And he was talking about the fact, he is a big time mortgage producer. He does 1.5 million a year in income
mm,
for like the last 10 years. And he's got all these accounts. He's got all this, money in the accounts and the assets and everything. He's like, man, on paper, I'm rich, but
mhm,
I do not feel it at all. And the reality was that, yeah, he might be rich, but he wasn't wealthy. And my
mm,
definition of wealthy is your ability to be present for others.
mm,
How present can you actually be? Because when you're wealthy, that usually means you can be fully present because you know all your finances are taken care of, things are in right order, you know what's going on. And when I see this, I looked at him and I said, okay, well, let's look at your actual finances of what's going on. And I saw this. His number one thing was like, man, I have to start over every single year for this thing to continue. But yet, when you looked at his assets, not a single one of them produced income. Not a
yeah,
single one produced cash flow back to him. And so the things that you want to be able to do are, how do you buy what I call cash flow engines, right? Cash flow engines are things that produce income taxed more efficiently than your paycheck. Real estate, businesses,
mm,
the stock market, even bonds, whole life insurance, right? These all of those items produce income for you. Well, if you look at your paycheck, right? Most people's paycheck is what's called earned income. And I like to talk about the fact that earned income has a lot of financial gravity pulling on it. You got federal taxes, state and local taxes, you got social security taxes, you got retirement contributions, which aren't a bad thing. Just the order in which we do things are important.
mm,
You got, all these things that are pulling on every single one of your paychecks. Well, if you really were to start creating cash flow engines rather than just accumulating wealth in these accounts, those cash flow engines would start producing income, cash flow for you to start alleviating a lot of those pressures. You'd start to feel a little bit of a headwind and start feeling a little bit better about the fact that, oh, wait a second, my assets are producing enough income to start paying for my expenses. And then we get to talk about what you just said a minute ago, which is like the choice. I get to choose to work. I have optional work income, right? So, and it could be as simple as you buying a small real estate property and it producing $200 a month in cash flow. Well, that $200 a month now can pay for your Spotify, your Disney, your Hulu, your Netflix, your whatever it may be. And you get to save that income and reinvest it the next year. So I
mm.
think a lot of people in their world do feel stuck because they don't have any cash flow producing assets and they're living in a financial junk drawer, and lifestyle creep is beating them down like nobody's business.
Mm. Yeah, I think what you're talking about, and that was one of the things kind of first introduced to me with the book Rich Dad Poor Dad, is there are really these two worlds that exist. The world of scarcity and the world of abundance. And put it that way,
Yeah.
I'm originally from Czechoslovakia. I lived under communism. Talk about scarcity mindset and all of that stuff. That's where I came
Oh, yeah.
from. And a
Oh,
lot of
yeah.
people around me that I know that come from there. And then you got this world of abundance, and the rules in these two worlds are they're complete opposite. right? One
Mhm.
of the best ones that I like to say, like a lot of people in the scarcity mindset will spend a lot of time chasing after saving a little bit of money. And people
Yeah,
in the abundance, they spend a lot of money buying back their time. But I think
mhm,
one of the kind of principles that I wish that was taught a little bit more is what you just mentioned, all of these cash flow engines, is like a lot of people with the abundant and wealth mindset, they understand that when they go and make money, that money now needs to be invested into something that's going to create more money.
that's right.
Unfortunately, people in the scarcity mindset, they spend a lot of money on things that are just expenses. And
Yeah,
that money every month, that's why they're kind of in this
yeah,
hamster wheel, right? They just keep on spending and paying for stuff because they don't have anything. That's why actually in the book Rich Dad Poor Dad, when it says your house is not the biggest asset, I'm like, what do you mean it's not the biggest asset that I have? It is. And we
yeah,
called it liability because it wasn't producing cash flow.
that's right.
Like every year that I have it, it's costing me interest, costing me property taxes and all this. Yeah, it allows my family to have our own home, right? Which I think everybody wants to have.
Right.
But it's how you understand how it operates. And I think this is where a lot of people don't understand that there are different rules and how you
Yep.
look at it. This thing, the best way I heard somebody explain kind of the wealth mindset, it's like, hey, when I go make money, I want my money to go and make a whole bunch of babies.
That's right.
And then I
That's
go
right.
and spend the babies, but I know that I'm going to get more babies,
That's
right?
right.
Like there's going to
That's
be more
smart.
money that's going to be created. And then you can go and spend that money where, like you mentioned, kind of that $200 from that property, right? Like, next month it's going to kick out another $200, right?
That's
So
right.
you don't have to do anything more for that. Unfortunately, most people don't understand that most of their life they're stuck where they're the economic engine of everything and they have not figured out how to go and build some other economic engines that are actually going to operate without them.
Agreed.
you know?
Mm.
So where, when you're looking at all this, and where do you kind of feel like that most people unknowingly are kind of handing over control over their finances unknowingly? Because I think most people think, hey, I'm doing all of the right things, I'm listening to the advice and I'm doing this. But what are kind of the biggest places that you see that individuals are doing this where there is that drag on things?
Yeah. I think a lot of it is following advice that's not meant for you.
Mm,
Uh, I talk majority of the people I talk to are making over 450 grand. But I do also talk to a lot of people that make between, 100, 150 to, 300 or 400 grand. And what you find is that they will say, well, why isn't everybody doing this? Or why, they're just going to ask questions that is meant for everybody. And you got to analyze, who is everybody? Is everybody the masses of America? Is
mm,
it just the people you talk to? Is it people on social media? Like, who is it? Because if it's everybody and you're talking about the masses, well, the masses of America are struggling massively for anything financially.
mm,
So if you look at your world and you're saving more than 4%, you can come up with $1,000 expense. You're not drowning in credit card debt and a couple other more of these statistics. Why are you listening to the same advice everybody else is being
mm,
given? Right? In the gym, when you first start out in a gym, if you were to go try and lift heavy weights, you would get hurt. When you start in a gym, you got to start at the baby steps, right? You got to know your form. You need to know how to do things the right way. You got to get established for what weight you can lift, right? You got to understand your stamina, your all of those things. But if you stay only doing those things, you're not going to get very far in the gym. Eventually, you have to progress to what we call progressive overload to start adding more and more weight so that you can get stronger over time. The same is true in your financial world. If you stay listening to advice that you should have listened to when you first started out, you're not going to get very far. At some point, you have to progressively overload your financial position and start learning a little bit more. Your financial education should always outpace your finances by a good 5 years.
mm.
So when I think about it, and the reason most people are stuck is because they're listening to advice that's not meant for them. If
Yeah,
they make unique income, they should take unique planning
mm,
items and unique planning tips, not what the masses are listening to.
yeah. You bring a great point, and unfortunately, we live in a day and age where, yeah, there was information overload. We got more
Yeah.
information.
Yeah.
Best example I use is, you know what? there is a huge obesity challenge or a problem, in the world, but there's never been more advice on how to
Yeah,
go and lose weight and how to go and take care of yourself, right? Like
that's
there is
right.
more than there's ever been. But again, people have to go and make the choice to actually listen to it, understand what kind of needs to happen, right?
That's right. And again, you've got to block out the information from others. Like these corporations are not dumb. They know exactly how to get to us and help us stay on the path that they want us to.
Hmm. Yeah, no, a very great point. Now, you build the Currents platform around the idea of flipping your flow. What makes that different from kind of the traditional way of the traditional planning that maybe a CFP would do? Let's use that.
So again, I think when it comes to most financial advisors, financial advice, they're really just going to, and they almost all started the same way. How old are you today? When do you plan to retire? What kind of income do you want? What do you have today? What kind of rate of return should you expect? Thanks for giving that to me. Here's how much you should save every year
Hmm.
to get to your goal. Like that's it. And then they might throw in some fancy stuff to be like, well, we do the bucket system or we do, hey, check out this Monte Carlo, whatever it is. Like all they're talking about is things that really don't even matter. They're just like something to shoot for. When we come into the life of somebody and we're talking about their finances, again, this all starts at free cash flow.
Hmm.
All wealth is created from free cash flow. What comes in minus what goes out equals free cash flow. And so when you think about this, and again, I'm probably repeating myself here, but when you have your paycheck deposited in the same account that your expenses come out of, and you have to manually figure out how much you're going to save, you're living on a financial treadmill and you're just going to be, behind the eight ball all day long because you're fighting lifestyle creep. You don't really know what's
No.
left over. Every time your income increases, your expenses increase. Unconsciously spending money while trying to manually save. And so with Currents, with our platform and how we interact with clients, is we first start at cash flow. And there's three main things that are super important when it comes to your cash flow. Number one, you want to separate your income from your expenses. So that's why we implement a reservoir. It's just a savings account where all of your income goes first. Okay. And then from that reservoir, we only remove the money that you need to spend each month. And that goes to your personal checking account. Your brain starts to recognize, oh, well, I only have X amount of dollars to spend now. So it'll adjust a little bit to that. Right. So that's number one is separation of income from expenses. Number two is how do you automate it? And there's three things that we're automating. Two, you have to do. One happens automatically. When you think about savings, most people have to figure out how much is left over, log into their account, do the math, plug it in, touch a bunch of numbers, and then move it. What we're saying here is once you move the money to automatically be deposited into your reservoir, and there's more coming in than there is leaving that reservoir, right? Your savings becomes automatic.
Hmm.
You don't have to think about how much do I save. You know every month the same dollar amount is going to leave your reservoir, and every month money drips in. So you've got this position where you're automatically saving money. And then the third piece, which is super important, is timely data. Okay. You want to use a tool that gives you timely data. And those three timely data things that we want to pay attention to are number one, what's your savings target and how close to it or above it are you?
Hmm.
Because if you're not to it, probably shouldn't do anything besides get to that number. If you're over it, we should go invest that somewhere. The next thing is, do you have positive or negative cash flow? If you have negative cash flow, that means you're spending more than you're making. We got to do something. We got to change something because you can't sustain that. If you are uh, making more than you're spending, let's go do something with that. Let's go build cash flow engines. And then the third piece, which I think is the most important, is understanding when you deviate from your plan. Everybody has what we would call your spending baseline. That's the regular amount of money that is dripped into your checking account, your expense account every month for you to live the life that you're currently living today. Now, if you ever overspent on that spending baseline, that would mean we are deviating from our plan. So we make a deviation. Well, you need to know very quickly, and I mean very quickly, was this a deviation of one time event, like our washer and dryer went out?
Hmm.
Or, oh, wait a second, it's been 3 months and we have deviated 3 times for $200 a month. Is this a new normal, or do we need to make an adjustment right now to get us back on track?
Hmm. You know what? I really like kind of what you mentioned from the perspective of or the idea of having an account, kind of like you said, the reservoir, right? And
Mhm.
money goes in there, and then the expenses go out. So what I'm gathering from you, then there is money that's going to be left over. Well, next month there's going to be more money coming in there, and then I guess at some point, do you actually take money from that to savings to kind of remove money there, or is that always kind of sitting there?
That's right. Well, once we know our target, once we know our emergency fund target, should we keep saving for emergencies, or should we start
Mm,
acquiring these cash flow engines? Should we start investing them somewhere else to improve our financial life? Because if you think about it, if you have your emergency fund, you've got extra cash there, you have a surplus. If we go create a cash flow engine with it, it should produce more income into our reservoir, which means next month we'll have even more
mm,
surplus. And it just becomes this flywheel approach to our finances to reach financial freedom faster. And as we've done this with thousands of users across America, the average savings rate is 29%.
mm.
And it is amazing the results that we're seeing from some of these families financially.
Yeah. And again, it's a system. And I think what I really got from this, and I like how you've set it up, is just the whole idea where you're taking the decision making and the thinking out of it, right? When you can automate something, it just makes it easier because, yeah, 100%. When you're kind of there and you're looking at your checking account, you know what your expenses are going like, there's
Yeah,
nothing left over to put in savings or move it out. Or if you have to go and do it manually, this way, if it already disappears per se, right? And you only get the money that's supposed to go into the expense account and it basically goes and pays for everything there, right? That doesn't become a challenge because, the individual doesn't have to think about it.
that's right. Agreed.
I think this is where, making everything more efficient really comes down to, right? Like how do you make things a little bit simpler and easier? And I remember looking at, a lot of uh individuals like Steve Jobs and Mark Zuckerberg and I think even Elon Musk, like they wear the same clothes, right? And people would go and
That's
make
right.
fun of them, but it's like one less decision to make in the morning, right?
Right.
Go and put on
Decision fatigue. That's it.
yeah. And I think the same thing comes with finances because yeah, when we left to our thinking, sometimes we overthink it and we make more problems for ourselves
That's right.
than anything else. So, when you think about a legacy and not just financial but personally, what do you want your work to really stand for? Like, what is the legacy that you want to leave for you personally and also in your business?
That's a good question. I think when I think about that again, number one, I'm a child of God, and I recognize that all that I've been given is a gift,
Mm,
and that a blessing is not to me, but through me into others. And so as I see this, it's I've got a real drive to show people that financial freedom is achievable by anybody.
mm,
And you can create generational wealth where it's not a handout, but it's a hand up. And when you are intentional and you're diligent about your finances, you can change your family's trajectory for
mm.
generations. And I think that's what I would want it to be remembered for.
Yeah, you bring a great point, and we often talk about it here on the podcast. Is just the whole idea that talking about the Bible, it tells us to basically create multi-generational legacy, right? Like
Your
not
children,
taken,
that's
yeah,
right.
it's the children of our children that should be taken care of, not just our children,
Right. That's right.
and I think this is where often it's missed. Often I believe that God gives us all the resources that we need to go and live the life that he designed for us. Unfortunately, and I'm guilty of that, sometimes I think I know better than God and I go and take it into my own hands.
Don't
I'm
we
sure
all?
I'm not the only one,
Yeah,
but
don't we
it's
all?
it's a matter of going back there and again educating. And I think this is really what sounds like you're on the same mission that we are at. It's all about kind of going and educating individuals, just letting them know there are other choices, letting them know that yeah, you know what, you actually have to do some proactive planning. Not only at the beginning we were talking about taxes, but like proactive
Yeah,
planning for everything and making sure that really we live the life that we were designed to go and do. I often say this,
right.
a lot of people, many people die at the age of 25. They don't just get buried until 75,
That's
right?
right.
Because they just kind of get into that rut and they keep on doing the same thing over and over again.
They
So
do, yeah.
so if somebody's listening to you right now and they're kind of ready to take back control of their cash flow or their planning, what would be the very first thing that you kind of encourage them to not necessarily do, but to even question?
I think it goes back to number one, taking a look at and just asking yourself the question, do I know how much money hits my account and leaves my account?
Hmm.
That'd probably be the first question. And then question yourself of, am I still listening to information that's not meant for me anymore?
Hmm.
I think those you questioning those things first will take you to the next level, and where you want to go. And there, I think it always just goes back to financial freedom is achievable for anybody. You
Hmm.
just have to ask the questions of yourself and remember that the quality of questions you ask determines the quality of your life.
Yeah, yeah. I've heard that said very similar to this. Like, hey, if you're not getting the right results, you're just asking the wrong questions.
Right. Mm-hmm.
So that's very important. Listen, I can't believe we've already been at this for some time. So as we close this,
Wow.
I've got I call them kind of rapid fire questions. The four
Let's do it.
questions, kind of usually whatever the first idea or thing comes to your mind, that's the right answer. What's the one book that really shaped how you think?
Killing Sacred Cows.
Hmm, it's a great book.
Yep. Killing Sacred Cows by Gary Gunderson.
Yeah. Is there a morning ritual or daily habit that you swear by?
It is. Yeah. I wake up. It depends on the week, but I'll either pour myself a coffee or a water with some stuff in it and read the Bible. I do the
Hmm,
Bible recap and then I read a book and then I go work out and then it's time to work.
awesome. Is there one bucket list item that you haven't done yet?
Play Augusta.
Hmm. What's a surprising hobby or interest that really recharges you?
Reading.
Really? Yeah. That, that's awesome. All right, one last question. I called it the hot one. Fast forward to the end of your life, and let's say that people forget everything that you ever taught them or said to them, but they do remember kind of this one last message from you. What would you want that message to be for them?
Mm, love first and lead well.
Hmm. That's it's an awesome answer. Wow, what a powerful and perspective shifting conversation, Brock. Thank you for
Thank you.
sharing your journey. Where can people find out a bit more about you and the work that you do?
Yeah, if you want direct contact with me, I would say that LinkedIn is probably the best. You can just find me at Brock Fortner on LinkedIn. And then if you want, you can go to stonecenturyfinancial.com and that'll give you a lot of more information about us, my team, and you can get a free copy of What Would the Rockefellers Do?
Perfect. So if you're listening, be sure to check out Brock's website and his LinkedIn and all the resources that he has. We're going to have the links to all of his social media and to the free resource in the show notes. Brock, thank you again for your time and your message. And remember,
Thank you.
Make Life Less Taxing isn't just about money. It's about freedom, clarity, and purpose. Keep building wealth, keep protecting your legacy, and keep living the untaxable lifestyle. We'll see you next time on Make Life Less Taxing podcast. Thank you again, Brock.
Thank you.
Thanks for joining us on this episode of Make Life Less Taxing podcast. Be sure to check out our other top advisor interviews at makelifilesstaxingpodcast.com.